It's Market Day Report. First full trading day of the week. Again, 5 full days, and we'll be doing this now. We're back on the bike, if you will, for the next, couple of months here till we get to Labor Day. We hit the Labor Day weekend, and we'll be back to a 4-day trade week for that 1 week. But got a stretch here where we can trade all 5 days, and we're doing that with some weather working its way into the market. But let's start with southern crop right now. Let's start with the cotton market. We are higher now, up a penny. When you see the 100 over there, the 1.00, that's 1 penny higher at 78.12 on the December, which is new crop. Let's run through the wheat market here. Spring wheat contracts are moving higher. We're also watching hard red September, most active, 645. It's up 6.5. We have soft red, or we call it sometimes just Chicago wheat, September, 610.5. It's up 10 3/4 cents. Got the soybean field behind us here, and November beans at 11.92. That's up 44 1/4 cents. Yeah, we're seeing 40+ cent gains on every contract here. And then we go to corn, and again, double-digit gains with December up 14 3/4, 456 1/4. Our guest is Dewey Strickler, AgWatch Market Advisors, Franklin, Kentucky. Dewey, with the weather here, is this a good market to trade the weather in?
Well, first of all, I never trade weather markets, Tony. What I'm looking at here is that, when you look at the 8 to 14-day forecast, it shows we're going to have above normal temperatures through the 19th, but we're not going to be looking at the intense heat. However, we are going to be looking at some dry conditions in most of the Midwest, and so that has sparked some short covering here by the funds, and that's why you're looking at beans about 40 cents higher. The funds did not have a big short on, but nevertheless, it looks like they're covering them. That's broad as it is long.
Yeah, that corn market moving higher. We're seeing, a 24.5 cent gain over the past 5 days. And you touched on the beans there, and we're up over, $1.25 here since the start of the year. So we've had a pretty good run here in the beans. So if we're taking the weather out of this then, and we're not going to trade the weather, what about trading China?
Well, I think there's still quite a bit of optimism that we're going to be looking at China purchasing large quantity of soybeans. Maybe they will, but I've got a lot of skepticism about that. When I look at the poly markets here, the odds are that the Democrat Party, they're 84% that they will retake the House. The odds are about 55% that Republicans will hold the Senate, but that's down about 2 points from a couple of months or a couple of weeks ago, rather. If Democrats take the House, that is going to impair Trump's agenda. If they do take the House and the Senate, he's out of there.
Well, those are good points to make there, Dewey. And I guess as we look forward after this election season, what's one of the top issues that the next Congress will have to address?
Well, something that they're not addressing, and that is the debt. The debt, is going to be pretty much close to about $40 trillion. You have the U.S. tax revenues about $5.2 trillion. We spent about $7 trillion. Something's going to have to be done by that. I look for interest rates to go higher, and of course, this is just going to fuel the debt even more.
Yeah, and we're also, speaking of that, money, we're watching the dollar index moving higher again today. It's gained about 3% here over the past month and a half. Dewey, hang on, quick break. We'll be back with more Market Day Report. We're talking proteins right now. I want to start with Class 3 milk. So this would be cheese, right? Well, we've still got that 15 on the July, but look out August, September, 16s and 17s from October and November. I have to see whether or not we can get this Class 3 milk market turned around. Now, the demand is there for some of the high protein, for example, whey. Whey prices have been moving higher. So there are segments of the dairy industry that look good. We get over here to the hog market in August at 98.60. It's down 15. I mentioned earlier Todd Thurman on LinkedIn just has a little piece where he's reviewing how the estimates are global population will be switching or at least adding more poultry into their diet, and that is expected to become the top consumed protein globally here soon, replacing pork, and that's obviously concerning for pork producers. Over on the beef side, we're lower here with feeders. August 359.87, that's down 75. And then live cattle, well, we're lower here. August off 40 at 238.82. Now, speaking of consumer demand, Dewey Strickler's with us. Dewey, what are your thoughts on consumer demand?
Well, consumer is obviously strapped for cash here, Tony. This past week, I just read where you could go and purchase an automobile. Used to be the loan sequence was for 6 years. Now it's been extended to 7 years or 84 months. That's just evidence, how tight it is with consumers here. That said, the beef prices have been moving up. I think that this week we've got the Memorial Day behind us. The 4th is behind us. And I think both the retailers and packers are just going to kind of be feeling out, what is this market going to be like here as far as the cash and the cutout and so forth. Technically, I look at the August contract for cattle. I can still see the market going up and making a new high here. But if it falls below 234, I don't think that'll happen.
Well, all I can say at this point, maybe chicken's still affordable there for you, Dewey. I hope you grab a chicken leg here on National Fried Chicken Day. Dewey Strickler's with Ag Watch Market Advisors.